Hi, good afternoon, everybody. Thank you very much for joining in today afternoon for this webinar on latest legislative changes and its impact on your business. We've been seeing attendees coming in as we speak. So I think for the benefit of everybody, we'll just wait for another 30 seconds for people to join in before we begin. Thank you again for having the patience. Hello, everybody. We are back. I think it's about time we start our webinar, and we believe that people can join in as and when they get time. For the benefit of everybody, we would be circulating the video recording of this webinar once we process it, which usually takes a week's time. So, without wasting further time, let's start with the webinar. We have been in the last 15 months or so, we have been experiencing a lot of changes in legislative department, be it the payroll legislations or the labor law compliances. Now, some of these changes directly impacts you as a business owner or the HR department or as an employee while they are filing their returns or making individual changes into their yearly updates. Just to what led to this webinar was the number of changes that happened in the last 15 months. So we just took an update of these changes and we realized that in the year FY 15-16, we had about 44 amendments done in a single year. So that was in the last year, and in this year, just in the first quarter, we had about 30 changes that have been implemented and will impact the way we operate on a daily basis. So if you just take a mean of these changes, we have about 5 to 6 legislative changes that's happening every month. Now, this calls for a deeper clarity of the legislative changes because it would impact you as an organization and your employees or associates as an individual. And we believe that as part of this community, larger community of providing HR solutions to the market, we hold the responsibility to update not only our clients but also people who are responsible for compliances and legislative changes in particular organizations. With that said, I am Suvish and I'll be hosting the webinar today. And with me, we have our chartered accountant and tax and legislative expert, Ms. Rohini Kumari. She's been helping us with webinars in the last 1 year, have helped us with various topics in the last 1 year, educate the market, educate our clients, and also helps with our product teams to ensure that our products are updated with the latest changes, both at the national level and also at the state level. So welcome, Rohini, for the webinar. We have a window, or you will see a window on the right hand side of your screen that is basically a control window. You are on mute as of now. So being mute does not mean you cannot ask questions. We have experienced a very interactive webinar in the past, and we would hope to have this webinar as well in an interactive manner. So please use that window to raise your questions. We will answer those questions towards the end or in between the webinar just to keep the engagement level going. During this webinar, to understand your way of being compliant, we have taken we are taking a few poll questions. These poll questions are not targeted to a particular individual or organization, since we are not collecting email IDs to these poll questions. Feel free to answer these poll questions. It will help us to understand how how organizations are managing their compliances today. So, with that said, I will move to the topics of discussion today. So, like you can see it on the screen, we have a few important topics to discuss. Income tax changes has been one of the most impacted as subjects in the last 15 months, and there have been a lot of changes with respect to new amendments and new formats of filing your income taxes and other forms that are responsible for ensuring an individual and an organization is compliant enough. So Rohini will be taking us through changes. In fact, through all the changes that has been done in the last year. Then we'll move on to the other topic, which has been in the recent news because of the changes that government was trying to propose. So this is with respect to the provident fund and other social benefits that has gone under the hammer of getting changed or getting updated with the changing times. Labor law compliance. This has been some of the laws in our country has been age old laws, and it needed an overhaul. So the government has tried to initiate the changes, and we have implemented some of those changes, and it would result in a lot of changes at the organizational level, because that would impact not only just that would attract not only just monetary penalties, but the larger question over here is can I afford to put my organization's reputation at risk by not being compliant? So that's what we are trying to address with the labor law. And last but not the least, when we covered last year, we had a dedicated webinar on National Pension Scheme, which gathered a lot of interest. Because one, it was an area where an individual can save taxes. Second, it was an interesting saving scheme when it comes to an individual's monetary management thought of frame of. So that we are trying to cover this topic as well during this webinar. Towards the end, if the time permits, I would want to take you through some of the services and the products that ADP has, which would be towards the end for about 5 minutes, about 5 to 6 minutes. So that's what we have on the agenda today. With that said, I will let the control to Rohini to take us through income tax changes.
So to start with, government is making many reforms and changes in a law to simplify, maybe digitize our system and procedure, which we as a company as well as an individual has to be in line to be compliant and to avoid all the penalties which one may incur due to non-compliance. So here from the platform of ADP India, I bring you all the changes, legislative changes for the year, and which would be also applicable in FY 16-17. So first, to go through all the income tax changes. First and most talked about change which is brought by Indian government now is Form 12BB. So till date, there have been no format of investment declaration and submission. In April 2016, for the first time, Central Board of Direct Taxes, via notification number 30, has provided separate format for claiming investments, deductions from tax for tax purposes. So a standard format showing all the particulars of investment made for the year has to be submitted to the employer for claiming any investment declaration. The major changes made up here were made in LTA, that is leave travel allowances. Earlier there were many misconceptions, or there was debate on whether to submit documentary proof for claiming LTA or not. But the Form 12BB has clearly mentioned that LTA, to claim LTA, all the documentary proofs of all the travel bills and everything has to be submitted. For HRA, so any person paying more than 1 lakh rupees as a rental payment in a year. Earlier, he used to submit either the PAN details of landlord, or whether the PAN details were not there, then he had an option to submit all the declaration, self declaration stating that the PAN is not there and the income of the person is less than normal taxable limits. And ultimately, please provide HRA exemptions more than 1 lakh. Now, this has been uh, declared as redundant as Form 12BB. So a person having a rental payment of more than 1 lakh rupees, to claim that over and above 1 lakh rupees of rent payment, he has to provide the PAN number of the landlord, the name of the landlord, and also the address of the landlord. So that's for HRA. Interest payable on home loan for any person who has taken home loan. For claiming all the interest deduction, he has to provide the name of the lender or the financial institution from whom he has taken the loan, the PAN details of that specific person or organization, also the address of the specific person or an organization. And for all the other Chapter 6 deductions, which we all know, 80C, 80CCC, 80C, 80DD, 80DB, we have to provide all the documentary proofs. So now the government has made it clear to claim any kind of benefit or any kind of deduction, you have to provide all the documentary proofs appropriate, providing all the specific details of investment made on a year basis under Form 12BB. So TDS return filing due date. So earlier, every company was supposed to file their TDS return by 15th of every month following the quarter end. Now, and whereas the government organization had a due date of 31st of every month following the quarter. So there was a difference of 15 days between government organization filing on 31st and non-government organization filing on 15th. Now this gap of 15 days has been removed. So now, to bring uniformity between government and non-government organization, the TDS return filing due date has been streamlined to 31st of July, 31st October, 31st Jan, and 31st May following the quarter end. So there are few pointers which people are confusing now. TDS returns, these due date filing dates are for TDS return, not TCS returns. So TCS return due date filing still remains the same. And also there has been a format change in TDS filing, uh, Q4 format. So the Q4, the quarter 4 filing TDS format will include few additional columns where the person has to provide HRA, for HRA, PAN, and name of the landlord, and for claiming house property interest deduction, the name and PAN number of lender or financial institution. So these detail has to be collated for the annum basis, and ultimately during Q4 filing, the government would be providing the new format where these new data has to be keyed in before filing the returns. So please start collecting all the PAN details and the name of the respective landlord, financial institution, so that Q filing details are appropriate and correct. So to move ahead, there has been many tax changes introduced via budget. So our finance minister has given a set of changes which are here for your reference. So the first change is tax rebate under section 87A. So any individual having an annual income of less than 5 lakh, he gets a flat discount of 5,000 rupees from his tax payable, which earlier was 2,000, so it has increased to 5,000. So if your tax liability, if your taxable income is less than 5 lakh and a tax liability is 15,000, now you don't have to pay 15,000, you only have to pay 10,000, because you get a flat write-off of 5,000 rupees from the taxable payment. The next section, 80GG, this section was already there in the Income Tax Act. The only thing is the limits has been increased. So in case a person doesn't have a HRA component in his CTC structure, and also if the person doesn't own any house in his name, his spouse name, and his children's name, so ultimately he can claim 5,000 rupees per month as a rental. In case he pays the rent, he can claim 5,000 rupees per month, or 25,000 of his total income for the year, whichever is lower, as a rent payment deduction from your total income. So this scheme is only applicable where there is no HRA component and you're still paying a rent, and also there is no house in your name or your spouse name or your kid's name. The surcharge rate has been increased to 15%. which earlier was 12%. So if your income for the year exceeds 1 crore or more, then you have to pay an additional surcharge over and above your tax liability of 15%. Also to highlight, there are few house property taxation changes made in the budget, which were like 80 was reintroduced. It was introduced a year long back. It was revoked in the last year, and now they have reintroduced. So an individual can claim additional interest of 50,000 rupees only if he satisfied the below following conditions. The conditions are very clear. He should be the first time buyer in FY 15-16. So he shouldn't own in his name any house property before this financial year. The loan sanction date should be between 1st April 2016 to 31st March 2017. Also, the loan sanction amount should not exceed more than 35 lakh. Also, the value of house property shouldn't exceed more than 50 lakhs. So, he should be first time buyer in this fiscal year. The loan has to be taken in this fiscal year, and the amount has been given for sanction amount and the house property valuation. So, if he satisfy all the four conditions, he can claim an additional benefit over and above his normal interest payment of 50,000 rupees. The second is Section 24, construction period was extended. So for self-occupied, specifically for self-occupied house property, there is a maximum limit of interest can be claimed as 2 lakh rupees. This 2 lakh rupees can only be claimed if the loan was sanctioned after 1st of April 1999, and the construction period, so from the loan sanction date to the date of possession, the gap between those years are not more than 5 years. Earlier this 5 years was 3 years, so now they have extended 2 more years. So even if your loan sanction, the gap between the loan sanction period and the possession date is less than 5 years but more than 3 years, you can still claim 2 lakh rupees. Now to go ahead, we're gonna see all the changes made in Provident Fund. There are a number of changes which was introduced, revoked, again reintroduced, refined in Provident Fund. So the major one and the most talked about change right now is Provident Fund withdrawal. So the income tax department has said in case you're withdrawing any amount of accumulated provident fund before completing 5 years of continuous services, and the amount which you are withdrawing is more than 50,000 of sum, then you have to pay a tedious tax or at the rate of 10% flat on the PF deducted amount. So you have to be very clear, if you're withdrawing any PF accumulated balance after 5 years of accumulation, then that's tax free. That is, there is no tax liability on such amount. But if you're withdrawing before 5 years of this services, then you have to, and your amount is exceeding 50,000, which the earlier threshold limit was 30,000, then you have to pay a TDS of 10%. But you have to make sure that you include that PF withdrawn amount as your total in your total income. And if you're following in higher bracket, that is 20% or 30% bracket, you have to pay the differential amount on that PF into that higher bracket rate, 20 or 30 respectively, and ultimately, so that you don't get any last minute pending tax liability during July month.
So, Rohini, if I may ask a question, so so we had a lot of queries from our clients as well, right? So in the last 2-3 months, there were some changes which were proposed, and then it was. Would you help us to help our audience to explain that part?
Yeah, the government has introduced in mid of Feb, stating that any withdrawal, even after 5 years of continuous services, which is made, then 40% would be tax free and 60% would be taxable. So there was a huge backlash from our society, because PF is the only one which is exempt at every stage, exempt at deduction, exempt, its interest is exempt, at withdrawal it's exempt. This is the only investment proposal which is EEE. So because they were making it taxable at the end of withdrawal period, there was a huge backlash, and ultimately our government had concluded, seeing those, say, provident fund for a very long time has been non-taxable, they have revoked their proposal of taxing it.
Okay. Okay. Thank you.
So along with these, there are many simplification policy introduced for withdrawal of provident fund. So department has eradicated manual form currently. So now they have introduced online transfer and withdrawal forms where individual can go on online portals, register themselves with PF department, ultimately file online and get employer attestation and submit it, so that it's online, it's everything online, so don't have to go to the department, submit the form. And also in current time there has been an additional benefit attached to this, so everything is online now, so you can go on online portal, submit your transfer and everything, but there was one link which was again offline, that was attestation by employer. Now recently they have also department has also announced, if an individual has a UN number which is linked with all the KYC details keyed in the UN number, and the UN number is linked with your PF account on the online UN number member portal, then ultimately there is no attestation from employer required as well. So now everything can be gone online. The only requirement for PF withdrawal or PF transfer to be online is you have to have a UN number. It should be linked with all your PF accounts, and ultimately you can do it in the UN portal online. So the another PF withdrawal change was that EPFO has introduced an increased benefit for all the pensioners if they defer their withdrawal after 58 years. So PF can be withdrawn 100% once you reach the 58 age. So if you defer after 58, so in the year of 59, if you don't withdraw, you will get an additional 4% interest over and above your normal PF interest rate. And if you defer again 1 year, that is 59 to 60, you will get additional compounded 4% interest on over and above all the interest which we're receiving till last year. So 4% interest for the first year, and 8.16% of compounded interest for the second year, over and above your normal PF interest you will receive if you defer your withdrawal after 58 of years.
So before we move ahead, Roni, I wanted to take some time to check with our audience on this particular question. So you will see a question popping up on your screen. This question will help us to understand how these updates are getting to you at this moment, and so you'll have to just select the answer out of the choices. So I'll just publish the poll. We'll have about 10 to 15 seconds for collecting the answers. Here you go. It's very interesting the way you all are responding. So we'll give it about another 10 seconds. We've already got about 70% of people who are attending this event. They have already voted, so big thank you for them. All right, so we've got about 80% participation. I can see some more people adding in. So okay, so I'll close the poll now. Just to give you an update, we had about 40% of people claiming that they've been getting this update from online forums. So, Rohit, that's an interesting update. Do you want to suggest some of the online forums where they can get these updates?
There are many blogs which people are writing in. There are many legislative update forums which people are writing in.
Okay.
We as an ADP also introduce a newsletter on a monthly basis.
Oh yes, so that's
where we capture all these changes on a monthly basis, where we
Yes.
communicate this to all. irrespective of clients or not. So
Yes.
that can be a good source too.
Yeah.
Don't you think, Suresh?
No, that's definitely that's a good idea that you brought in. So we do this monthly newsletter. We call it as the monthly chronicle, and the main idea with that newsletter is monthly updates on the changes, and we send it to everybody who's ever has subscribed to the newsletter. Yeah. With that said, Rohini, please proceed.
So there are many social benefit reforms also brought by government for benefit of all the individuals. So the first one was the PF department increased the insurance benefit to 6 lakhs under EDLI scheme. So EDLI is employee deposit linked insurance. So the people who are covered under ESI and EPFO, they get an insurance benefit of 6 lakhs now. The earlier limit of this was 3.6 lakhs. So it's almost doubled. So the formula here is given what is the quantum, how it has to be, what do you say, the quantum of benefit, how it has to be calculated. It clearly says 30 times of last month's salary, where the average salary shouldn't exceed more than 15,000. So 15,000 per month into 30, which anyways give you like 4,50,000. Excluding this, the family of deceased will be entitled 50% of the average accumulated PF amount, which subject to 1,50,000. So ultimately, summing up both the formulas, you will get the benefit of the deceased person will get an amount of 6 lakhs rupees. The next benefit is ESI offers free annual preventive health checkup for people. So any individual who's 40 years and above and is covered under ESIC can go for an annual preventive health checkup program, which is organized by ESIC. So these programs are basically done in hospitals and dispensaries which are affiliated with ESIC department. So you have to Google through and get all the details, and then you can go with your what do you say, your identification number and ESIC number, and have a free annual preventive health checkup program. There are few more social benefit changes which was proposed and implemented in our budget. So there is contribution of superannuation fund. So earlier the employer was supposed to no, or the limit threshold limit was 1 lakh per annum. So now that has been increased. An employer can contribute up to 1.5 lakh in all the recognized superannuation fund for availing tax benefit. Any amount over and above 1.5 lakh contributed by employer would be taxed as a perk. So it would be added in the total income, and ultimately tax would be applicable over and above 1.5 lakh. So superannuation and national pension scheme withdrawal. Withdrawal of up to 40% at the time of retirement is tax exempted, and 60% is taxable. So this scheme was applicable for PF also, which is recently revoked back, which we already spoke about. Employee pension scheme. So this is a government has introduced where the company, if employs new employee or freshers in their company, EPFO will pay the first 3 years of EPS. But two condition: it has to be the freshers have to be employed, or there should be new employment which are employed in the company, and the salary or the basic salary should be less than 15,000. Then the EPFO department will pay EPS contribution on behalf of employer for the first 3 years of such kind of employment. So the next are labor law compliances. So the first major introduction by the government is universal account number. So a universal account number is to be generated for each PF member. For this is universal account number is as good as a PAN number. It has to be one UN number each individual throughout his life, throughout his employment. What do you say? Life cycle. So the UN will act as an umbrella for multiple member PF member IDs. So this idea is to link multiple PF member under one UN number, and to given benefit, smooth transfer and withdrawal of PF amount, transparency in their accounts and get monthly SMS intimation of their accumulated PF balance. Download passbook. So this passbook is download PF passbook, what was credited, what was debited from your PF accumulated balance, and your UN number, UN card. List of previous member ID. So where have you worked? All the PF account numbers would be enlisted under one UN number. So it would be very easy to track all the PF account numbers. Where we, after 15-20 years, we are jumbled up which PF account and where we have worked. So this UN number will facilitate these easy tracking of all PF accounts, and enter and revise KYC details. So if something has been changed in our KYC details like bank details and Aadhaar card details, then we can go ahead and change those details through UN portal, which would be like government record would be updated on the base of today what our current records are. So how to activate this universal account number is go online, go to the UN portal, enter your mobile number, member ID code, and UN which is given by your employer. You will get a pin in your mobile number, submit it, get your credentials. Your username is your UN number, create your password, and ultimately you're registered. Go ahead, and from the next time, it's easy cycle. This is a 5-minute process, doesn't take more than 5 minutes. Get all the right details, your UN number, mobile number, and member ID, and in another 2 minutes you have an activated UN number where you can track all your PF accounts and ultimately get all the details then and there.
So this is basically gone online.
Yeah, it's already up.
End-to-end processes.
Yes, you have your proper UN number, your PF member IDs. Go ahead, register it right away.
So usually what is recommended? Employers, do they have to register on behalf of their employees?
No. This is employee centric. So
Alright.
individually you have to go with your all details and go this.
Okay.
No one gonna do on your behalf. Okay, going ahead. The major second introduction in labor compliance was Shram Suvidha Portal. So Shram Suvidha is a unified web portal which was launched to support common registration facilities and common e-filing for all major 8 acts in one go. So you don't have to register in 8 separate acts. You have to go in Shram Suvidha portal and you have to register once, and ultimately you will be registered for the next 8 acts. So the acts right now which are part of Shram Suvidha portal are Employee Provident Fund and Miscellaneous Provision, the Employee State Insurance Act, the Contract Labor Regulation and Abolition Act, the Building and Other Construction Worker Act, the Interstate Migrant Workers, and the Mine Act 1952. So there is many talks, many discussion to include more and more acts into this, but right now these are the confirmed 8 acts which are already part of Shram Suvidha. The main benefit of this portal will be reduced in transaction cost, so that there are not 8 types of registration. There's only one registration. There would be definitely less cost. It would be benefit to business. Make it easy. It would be very convenient for the establishment to meet their obligation by having one portal to swipe through 8 different acts, file all the returns respective of these 8 acts, and then register themselves.
Okay, so that calls for I think the web portal, unified web portal, will always help our employers to.
Very
So it's
much.
like one place for everything, right?
Yeah.
So I think that's a very commendable progress. So I wanted to we wanted to understand further about our audience over here, and we will launch. So with that said, we'll launch our second poll. After that, I think we can take a couple of questions because we've been having a lot of questions on our query window. So let's take one or two questions before we proceed to the next round. Before that, it's time for the poll. I'll launch the poll and we'll just have 15 seconds for the benefit of the time. So the question is, how do you currently process your statutory compliances? So we have some of the options that are given there through a trusted statutory compliance partner Now, there are a lot of vendors across the country who provide statutory compliance as a service. Do you partner with? Have you partnered with them to provide the services, or do you have an in-house team? Most of the organizations, they have a very well driven and a set of experts who can ensure that your organization is compliant. Or do you have such team inside your organization, or are you do you rely on smaller CPA firms or individual consultants who can help you to ensure you are compliant? So that's the poll which is in progress, and we've had about 72% people have voted so far. Uh, so I'll just keep this poll open for next 5 seconds. We'll close the poll. So we can see that most of the organization, about 41% of our audience today uh, have a trusted statutory compliance partner through which the service the manage their statutory compliances. That's good to know because this is the area you don't want to mess with. Right, Ronnie?
Very true.
All right. So thank you very much. We had 83% people who have voted in favor, or majority of them have voted claiming that they have a vendor in place already. So with that said, Roni, I wanted to take a couple of these questions towards the end. I think there was one question at the beginning. You mentioned TCS.
Yeah, yeah.
So people wanted to, our one of our audience wanted to understand what TCS is.
TCS is tax collected at source.
Okay. So it's TDS and TCS.
Yeah, there are two different
Right.
things.
So okay.
So TCS is basically for interstate collections. So TDS is for state-wise, or TDS is flat on all the salaries and payment you make normally. And TCS is interstate. Anything you make interstate, you have to have TCS there.
Okay, so this is the question from the income tax section that we had at the beginning. The person wanted to understand in terms of the PAN, what about the rent paid to multiple landlords, where multiple PAN will have to be reported?
Yes, if your rental income as a rental payment for the year is exceeding 1 lakh rupees, irrespective of how many landlords you have to have all the details, because now, as per Form 12 BB, you don't have any option for any other declaration. So ultimately, you have to give these details of PAN number and name in all the portals.
Okay, so there's another question where this person's he's asking on behalf of his organization, where he's saying that his employees are getting difficult, are finding it difficult to get PAN numbers of the bankers. Any suggestions how it help as an organization?
Banking PAN numbers, if I'm not wrong, it's already there in their banking, all the documents, it would be there. If it's not there, and it's normal application to the bank, the PAN number of all the banking organizations are very public. It's not very personal. Like how we individuals make all the PAN number very personal. For banking institution, it's nothing like that. It's already very public. They publish their PAN number in major of their certificates, agreements, deeds. So if by any chance you don't have any such deeds or documents, please go ahead, write a letter to the branch manager stating that these are the requirements based on the latest updates from income tax. Please provide your details. I'm very sure they will be helpful there.
So another audience of ours has a question related to an expat. So this person, I think he has an expat from Belgium as part of his organization. Can he withdraw PF contributions, including EPS? They do understand that they have a different form and other requirements, but would you be able to throw any light?
Yeah, sure, sure. So anything contributed in Indian PF and EPF, all the rules which are applicable to Indians apply to them also. So the Belgium national expat person can only withdraw these amount or at the age of 58. They don't have any other option, unfortunately.
Okay. Thanks, Roni. I think we can take further questions as we move to on further slides.
So the next most talked bonus act, the next most talked amendment in the last fiscal year was bonus act amendment. So the government has provided the payment of bonus act uh, amendment bill in 2015, where they said the changes have to, the minimum salary for applicability of bonus has to be raised to 21,000, which earlier it was 10,000, and the minimum salary applicable for calculating the bonus threshold limit was again doubled to 7,000, which earlier was 3,500, and these changes have to be applied from 1st April 2014 and not 1st April 2015. So this was the major amendment provided by a payment of bonus by our government. Many of the states approached to what do you say, to make the retrospective effect on a stay, and these are the following states which has given passed an order for stay of retrospective effect. So Kerala on the specific date. So these are the given state where the retrospective effect of the bonus act amendment has been stayed. The final decision has yet to be taken, but right now these are states, so these are not applicable from 1st of April 2014. It is applicable, the calculation is applicable from 1st April 2015. But what happens from 1st April 2014 to 31st March 2015, it's the final decision has yet to become. The rest of the states have to do all the retrospective calculation, pay the bonus amount, match the minimum statutory limits to be compliant with the act. Any contribution or contravention of the given provision will have an effect of either the company high officials would be imprisoned for a period not more than 6 months, or a fine of rupees 1,000, or both. It may depend on the department. Now the major national pension scheme has been introduced in 2015. This has been a new, it has always there in the income tax act, but there were many changes which was made in this investment scheme, which helped or kind of made this scheme popular. So the first, there are the sections which are applicable under NPS or national pension schemes are 80CCD1, which provides a salaried employee can claim up to 10% of the basic plus DA restricted to 1.5 lakh under this NPS scheme. Or employer can contribute on behalf of employee up to 10% of the basic. 80CCD2, any employer contribution up to 10% of the basic of that individual is over and above the 1.5 lakh limit. So if the 10% of basic is say 10 lakh rupees and the employer is contributing on behalf of employee under NPS scheme, that 10 lakh rupees can be claimed as a tax exemption by the individual by filing his return. 80CCD 1B is where individual can voluntarily go and contribute of an amount of 50,000. This 50,000 is again over and above 1.5 lakh, and individual can contribute under 1 and 1B, or the say individual contributed 2 lakh, assuming that the individual had no other investment deductions. So 1.5 lakh, also assuming that the 10% of basic was 1.5 lakh for this individual. So the person can claim that 1.5 lakh under 80CCD1, and the 50,000 which is excess, which cannot be claimed under 1, can be carried forward and claimed under 1B. So ultimately, one NPS contribution can be claimed under 1 and 1B, either of, with the condition that whatever amount is claimed under 1 is not claimed under 1B, and whatever amount is claimed under 1B is not claimed under 1. So one major change was Atal Pension Yojana can be claimed under NPS. Earlier, Atal Pension Yojana was not eligible for any investment deductions. Now, Atal Pension Yojana can be claimed under NPS. And again, any NPS withdrawal at the time of withdrawing 40% is corpus of the corpus is non-taxable, whereas 60% is taxable.
Okay, so we thanks Roni. I think that brings us to the end of the four topics that we were trying to
Submersibles,
discuss.
yes.
Before we move to the questions and the last topic that we have, I will raise our one more poll where we want to understand what are the real challenges that with respect to updating your teams with the legislative changes, or is it with respect to implementing these changes? So I will throw open this poll for the forum to respond, and as usual, we'll just take another 10 to 15 seconds of your time. So here you go with the poll. So that's the question: challenges you face with your current process. Is it tracking every single legislative change that is applicable? Is that the challenge? Or do we have challenge around uh, processing or implementing these frequent changes accurately, because accuracy is paramount here. Uh, some of the conversations that we have been having on our online community, that is Bridge, is that it sometimes takes a lot of time and efforts to keep this change going. And some of you might not be even happy with your current vendors. So we would like to understand how this goes. So we have had about 50% of people have voted, and majority of them states that processing and implementing these frequent changes accurately is a challenge, which I think we also completely agree with that, because we've been hearing that from our from people who inquire about these services with us. So with that said, I will close the poll. We have, I think, this poll that's only 60% of participation. So all right. So with that said, thank you for answering. I'll close the poll.
With that said, I have a few more pointers to be added in national pension scheme. Uh, so for opening a national pension scheme account, every individual needs a PRAN number, that is permanent retirement account number, to keep the account active for the period. For the lifetime, minimum one contribution per year is mandatory. Per contribution, the minimum amount is 500 rupees. Per annum balance should be 6,000. So any amount below 6,000 for a year, your account would be deactivated. For any deactivated PRAN account, to reactivate it, you have to pay 100 rupees as a default penalty fee per year to reactivate your account. Any NPS contribution can be only withdrawn after 60 age year of age. So that's it from my side. Suvish, you can take it over. Thank you.
Yeah,
Thank you so much.
thanks, Rohini. So I think our job is not yet done because we have a lot of questions. But yeah, I can definitely give you some rest to your throat. So I wanted to just quickly run through ADP's portfolio of services before we take up those questions. So we have been in this business for globally. We have been in this business for quite some time, and in India we started this journey a few years ago. So as part of our statutory compliances, this slide explains in nutshell what we provide as services. So we have clients from all sizes. Who avail our services, like payroll compliance services. This is even part of the product, and the usual payroll services, your PF, PT, LWF, and ESI, calculation and reporting of all these compliances. Then you have shops and establishment compliances, again one of the most important compliances services that we provide. The other services that we provide are with respect to the CLRA and trust management. So trust management is a fast growing services where you have superannuation, gratuity, and other retirement benefits that can be managed. Uh, so just 2 months ago, we had a very detailed webinar by our trust management expert, Mr. Suresh, who took us through various best practices by managing trust. So some of the salient features is we have both modes of communication and management of document, which is an online delivery, and also the covering up the last leg of statutory compliances, which is giving it the submitting the forms to the government authorities. So we the presence is pan India, and we do update our clients by through various modes. Moving further, I wanted to introduce, or rather, this product has been there in the market for last 1.5 2 years, and it has only grown of the features and capabilities. So as you see it on the arc, that's our product ADP Vista HCM. So this product is unique because this is provided as a SaaS solution. That is one. And second, for our outsourcing business, where I outsource their entire payroll and other HR activities to us, they are also processed on top of this platform. So it is entirely up to the clients on whatever mode they want to choose. Either they want to outsource their entire payroll to us, or they want to use it in house with a secure and highly scalable product. So in this product, we the HRIS. Employee record system sits at the nucleus of the system, and we provide the peripheral services like a payroll compliances, leave management, ESS, the self-service portal, time and attendance, and onboarding and separation, which is your exit management. That includes your full and final settlement and other formalities when your employees leave the organization. So all of these are governed by ADP's global standards of security. So ADP has got a separate organization within itself, which is called Global Security Organization, and this organization is responsible for every data that passes through ADP's data centers. We don't rely on third-party data center providers. We have our own data centers, which are managed by international standards of security and procurement. Regulatory expertise, since this is a cloud product and since we are into the business, clients don't have to. That was one of the reasons why we asked that question. We wanted to understand how you are getting updated. So most of these compliances updates that are part of your usual payroll and statutory compliances processes get updated automatically through our product. So we built a scalable architecture. Now that is nothing new when it comes to cloud solution, but why we believe it is scalable, because we built a three-dimensional scalable architecture over here. So when we say three-dimensional scalability, any solution or the market that is constantly evolving. HCM, what it is today, it wasn't the same 5 years ago. But today we have more data analytics in place. We have other modules that were not very prominent 5 years ago that are today part of it. So your solution should be able to scale in all three dimensions, which means that whether you are a 5 employee company or you're a 50,000 employee company, your solution should be able to accommodate this level of scale, which is your scale high. Scale wide, which is a second dimension. That means that today your solution can do X, Y, Z, for example, number of capable features or functionalities. Tomorrow, when the market changes, your solution should be able to accommodate those new functionalities that are required for an HR or finance department. So that is the second level of the change. Third level of the change is every feature or functionality requires customization because every organization's needs are different. So that's how we built, based on our decades of experience in outsourcing the payroll solution. We gathered all that expertise to build that into the product. So be it so any level of customization or configuration that you require in terms of compensation or in terms of the leaves that you have in your organization or the way you want to so for example, in a manufacturing company, you would want to completely customize the time and attendance of your labor force. So we have developed the solution in such a way that it can also scale into the third dimension of managing your employees. Towards the end, the platform that sits in the at the bottom is our mobility. So when we say mobility, we are not talking about mobile apps. The reason why we don't talk about mobile apps is because today your employees have 100 different apps on their mobile phones, smartphones. They wouldn't want to have an additional app on their mobile phones just to access HR, your pay slips or other HR related data. Rather, what we have done is we have built our entire application with the mobile interface so that it can work seamlessly on a desktop. It's a screen agnostic kind of a solution. So your employees and yourself don't have to download an app, but they can visit they can click onto that URL and the product becomes being by virtue of being a responsive product, it gets easier uh, to operate. The second and one of the most important things are the HCM or the payroll is not a new thing. So a lot of investments have already gone in to make the SOR or system of records up and running. And we would want to, or nobody would want to rip and replace that with a new solution altogether. So we do understand that, and that's how we have built adopters and other integration methodologies to ensure that our system integrates with your existing systems. So that's about Vista HCM. I would just leave the audience with this snapshot for about 5 seconds that explains ADP's presence in the global forum. So we have so I'll just give another 5 seconds before we open up our last poll question, and after that we'll take up your question. So I'm opening up our last poll question, which is yeah, do you want to contact ADP? Now we understand that some of the audience are our clients. They can choose the third option, and we saw that a lot of people are already using their respective vendors, and they wouldn't want to have a change there. Uh, and if you want us to contact you, do let us know. We will reach out to you and see how we can help you with your processes. So we have about 50% of people have voted. Right. It looks like we have a lot of ADP our clients who are participating in this webinar. A big thank you to everybody who has taken out time to attend this webinar, and we hope it was useful. So I'll close so we've got about 60% of people have voted. So thank you very much for that. I'll close the poll now. Now for the next minutes that we have, I will take you through the questions, Rohini. So I think, okay, so one person wants to ask Rohini, is the pension scheme, is that applicable only to a specific industry?
PF is applicable to all establishment who employs over and above 20 employee. So EPS is a part of EPF. So ultimately, where PF is there, pension scheme is already there. You have to just enroll those policy of EPS under those PF contribution. That's it.
Okay. The other question one gentleman wanted to ask was for UAN.
Hmm.
how do we link their previous records from previous employers to the current one? It's very interesting because I just asked you this question for myself just before the webinar.
Go in UN, activate your UN account number. There is something called transfer form. Fill in, key in all the details, transfer all the respective amount from all the balances to the current PF account which you are in. So say your UN number, I have 1234 for this current fiscal year. For the last year it was 357. So apply a transfer online form for 357 to 12345, and ultimately that would be transferred, and ultimately both the account would be linked to your this account number. So keep on doing all those for your all previous account. Transfer claim, transfer claim, transfer claim for A to B, B to A to T to B, C to B, everything. So the B, this current PF account number and this current UN account which you have activated will show all the rest of your previous records. This is very easy. The only thing is if your UN number is not activated with all the KYC details, then you have to have your current employer attestation, and ultimately they will forward those forms to PF department. That's
Okay.
it.
Some people claim that their employees were unable to log into the system for PF details. I think this is
3-4 months back. Yes, it was difficult. Ask them to retry it, please.
so there was okay. There's a question. As per the new provision, government will be depositing 8.33% towards pension of employee. If employee leaves the organization before 3 years of completing service, will his pension amount can be transferred or withdrawn?
See, the government is giving a benefit to the employer, not the employee. So if he leaves in the first year itself, so the government would be paying for the first year on behalf of employer. So the employer doesn't have to contribute it. Anyway, whatever, either the government contributed or employer contributed for how many years in the pension scheme, this amount can be transferred and withdrawn by this individual anytime he wants.
And he can see it in his e-passbook?
Yeah.
Okay, because that was an extension to that question. So there was just another question where this person and his organization has done already the UAN linkage to few current employees, but they are unable to track their PF transfer details in PF passbook after old fund transfers to the current PF pass account. How we can resolve this issue?
If they have an activated UAN portal, then they are it's very easy. It's everything online. So like how our bank transfer is, right, we will have a popper message, this amount was transferred to this beneficial account. So ultimately even UN account should have that poppers. If it's not there, then you have to by some technical issue, you have to go back to the governments and get in contact with them and ultimately ask them for passbook to provide all the transfer details.
Regarding the bonus, Rohini, is there a standard formula for calculating bonus as per the amendments?
Standard formula, the minimum rates and minimum rate is 8.33%. The minimum amount for calculation base is 7,000. So 8.33% into 7,000 comes to, if I'm not wrong, 292 is the minimum amount per month, which has to be contributed for the person, and 20% is the maximum. And again, the minimum base is 7,000. But these are the minimums which the government or the act talks. You can give any number, any maximum amount of bonus as per your company policy or your
Yeah, sure.
needs and requirements. Yeah.
Okay, so as an extension of that question, Rohini, people wanted to ask how can this be implemented in IT sector? And I'm assuming this means information technology. Is it different from sector to sector?
No, payment of bonus act is same for all the sectors. So there is no rule differentiation. There is nothing different from manufacturing to IT. So it's same. The same rule applies.
Okay. The other thing, is it mandatory for employer to contribute towards NPS?
Employee or employer, there is no mandatory to contribute in NPS, but the company, based on the benefit of employee can give an option whether the employee has to contribute or the employer. They have to decide it. Anyone can contribute. It's not like PF where employee is contributing the same amount employer has to contribute. There is an option where either the employee or the employer or both the person can contribute to NPS scheme.
Okay, so we've already overshot the time. So I can see a lot of questions that are here. Um, so let me just take the last three questions. All right, and then let rest of the questions. Then maybe you can respond over the email.
Yeah, I will.
So regarding that NPS itself, Rohini, what happens with NPS when employee leaves the organization?
It's similar to PF, right? The NPS is accumulated, the balance is contributed by employer or employees is accumulated in his PRAN account number. This PRAN account number will be activated for the next 60 years, unless and until this individual attains 60 years, where after that he can withdraw that amount.
So can statutory bonus be a part of compensation structure and be paid on a monthly basis as it is seen in monthly breakup with many companies?
Yes, it can be. So the act only talks about what is the minimum amount to be paid on an annum basis. You pay it on a month basis, you pay it on a quarter basis. It's your company policy, but you have to the whatever amount paid on monthly basis summed up for the annum should match with the minimum requirements of bonus act. That's it.
So there are a couple of questions on UAN. I will try to segregate both. I'll try to have it as a combined question. So what happens if an employee has two UAN numbers, and some people are having issues where the previous UAN cannot be linked. If the record from the previous, say for example, if the date of birth is incorrect, can this be corrected without contacting the previous employer?
No, unfortunately, any records because your UN is not activated. Any records of the previous employer, you have to go back to your previous employer and change all the amounts, dates, name, surname, everything. And for the people who have two UN number, you have to deactivate one and keep only one. It's like PAN. I said right. PAN UN is very similar to PAN account number. So you have to only have one UN number throughout your life career life cycle. That's it.
All right. Okay. So with that said, I will close these questions. Rohini, we can discuss over these questions later so that you can respond to all the email these questions over the emails. But a lot of people had this query that whether we will share this document with everybody. So yes, we have recorded the session, and we will be processing this video as soon as we finish this. We start processing this video right after this webinar. Once the video is processed, we will upload it onto the ADP's YouTube channel. And we will send the link to everybody who has attended or registered for this webinar. Some of the questions were around ADP Vista HCM and if they can have a demonstration of the product. Yes, for that also we will send a mailer to people who have requested for a demo. We'll be happy to give a customized or personalized demonstration of the product to all of you. With that said, thank you very much, Rohini, and thank you very much, audience. You've been a very active audience. And thank you very much for the responses you have given to our poll questions. These questions help us to understand the market in a better way. Also to ensure that where we are in terms of the demand and what we develop as a solution. So it's a reality check for a vendor like us as well. So with that said, thank you very much for the for your attention and your patience. And we will be back with our next webinar. So our next webinar we are planning on the data security topic because we believe the employee data with respect to their payroll or their bank account, because payroll data is very sensitive, extremely sensitive, and ADP keeps it very close to its chest. So we wanted to ensure that the market, we you as our clients, or as a provider of payroll to your employees, should understand the sensitivity around the data that you're handling. And we wanted to give you some of the global best practices that ADP is following, the European standards, the American standards. So our next webinar would be based on that. We've been fortunate to get some of the leaders from US and European Council to help us speak on the topic. We will send the invitation to all of you since you have attended this webinar, and we hope to see you again next month. With that said, thank you very much. Have a very good rest of the week and rest of the day.
Thank you.